The fascinating thing about it, however, is what are the Chinese actually doing? And if you look at it from the Chinese central bank's point of view, the People's Bank of China, they have a long-term policy of reducing their dependence on Western currencies. It is also a vowed public policy of the Chinese government, the Saudis now, Russia, Iran, the Shanghai Cooperation Organization, and the extended BRICS organization as well. Is we're looking at a situation where the two major hegemons, particularly Russia, who's, with Putin had his nose put out of joint by sanctions, currency sanctions, and China, they basically want to do away or lessen their dependence on the dollar.
Legendary investor Alasdair Macleod points out a significant shift in the behavior of gold prices, indicating a change in market sentiment. Gold has soared to unprecedented heights, surpassing $2,400 an ounce, which has caught the attention of global markets. This shift is particularly noteworthy due to increased gold purchases by China, its central bank, and other entities within the country. Concurrently, Western ETFs have experienced declines as gold flows toward Asia, illustrating a clear divergence in market sentiment between the West and the East. China, the world's largest producer and consumer of gold, holds a central position in this extraordinary surge. Interestingly, China's heightened demand for gold departs from the historical rivalry between China and India as the world's biggest gold buyers. On the other hand, Western institutional investors have been selling gold despite its rising price, as seen in declining inventory levels in Western ETFs and falling open interest on COMEX. This trend, largely influenced by psychological factors, suggests a temporary divergence in investment strategies. However, there may come a point where investors in the West recognize the bullish trend in gold and shift their investment strategies accordingly. In contrast, major economies like China and Russia and members of the Shanghai Cooperation Organization have been actively reducing their reliance on Western currencies. The decision of the People's Bank of China to decrease its dollar holdings aligns with this broader economic strategy. This strategic shift carries significant implications, especially for the U.S. Treasury, given China's substantial holdings of U.S. Treasuries. Alasdair asserts that the continued reduction in China's dollar holdings could impact the financing requirements of the U.S. Treasury, potentially leading to a debt crisis. We will present clips from Alasdair Macleod's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The gold price has been telling us in recent months is that the fear is now about the future of credit, not interest rates, not the exchange rate of the dollar measured in other fiat currencies, which of course is what the trade-weighted index is. So this is fundamentally different. Now, to an extent, it has been led by China. The pace of Chinese buying, not just the central bank, but also other Chinese actors, of physical gold has increased. Western ETFs have been declining and feeding gold out, as it were, into Asia. Now, this is an extraordinary situation, because what that again tells us is that we in the West have tended to sell gold while it has been going into new high ground. Now, this is the sort of behavior which is temporary, because there does come a point, I'm just purely talking about psychology now, there does come a point where people sort of turn around and say, oh, hold on a minute, gold is in a bull market, bonds are in a bear market, that makes equities less attractive. The only game in town is gold. Therefore, we should, why is it going up? Perhaps we should buy it, sort of thing. So it's a sort of in-between period, if you like, in terms of the psychology of markets in the West. The fascinating thing about it, however, is what are the Chinese actually doing? And if you look at it from the Chinese central bank's point of view, the People's Bank of China, they have a long-term policy of reducing their dependence on Western currencies. This, after all, was the whole point about trying to set up a new trade settlement currency for BRICS, which was mooted before the Johannesburg meeting in last August. It is also avowed public policy of the Chinese government, the Saudis now, Russia, Iran, the Shanghai Cooperation Organization, and the extended BRICS organization as well. So what we're looking at is a situation where the two major hegemons, particularly Russia, who's, with Putin had his nose put out of joint by sanctions, currency sanctions, and China, they basically want to do away or lessen their dependence on the dollar. So from the People's Bank's point of view, it would be entirely consistent for them to reduce their holdings in dollars. Now, when you look at that properly, really, it's not so much that they're buying gold, but it's more that they're selling dollars. Now, this adds, and I think that this is something which markets will begin to realize quite quickly, it adds another dimension to the dollar problem. And that is that the largest single identifiable buyer of US treasuries is the Chinese government. And the Chinese government is selling dollars. And if it's selling dollars, it's also selling the underlying assets in which those dollars are invested, which, of course, includes a figure like $775 billion worth of US Treasury debt. So if the Chinese are actually reducing their dollar holdings, then what that means is that they are not going to be participating in the increased financing requirements of the US Treasury with a budget deficit of over $3 trillion to fund. This is going to create a debt crisis for the US Treasury. So that message, I think, is gradually spreading in the higher echelons around Asia, particularly China, Russia. Russia, I think, can't wait, basically, to crash the
recent
whole
surge
thing.
in gold demand, led by China's central bank and private sector, has reshaped the gold market dynamics, tilting control away from the West. In 2023, the People's Bank of China, PBOC, made record gold purchases of 735 tons, with a significant portion obtained discreetly. At the same time, the private sector imported a massive 1,411 tons of gold in 2023, followed by an additional 228 tons in January 2024. This spike in demand is rooted in China's strategic decisions dating back to 2002, when it opened up the gold market to its citizens through the Shanghai Gold Exchange. This move encouraged people to diversify their wealth portfolios and reduce reliance on Western currencies. By leveraging capital flows and export surpluses, the PBOC could have accumulated up to 20,000 tons of gold, although official figures reveal only a fraction of this. Russia has pursued a similar strategy, increasing gold production and seeking control over gold-rich regions, signaling a deliberate shift towards gold as a financial asset amid geopolitical tensions and sanctions. Alasdair points out that discrepancies in reported gold reserves, combined with instances of confiscation and leasing, cast doubt on the integrity of custodial gold. This uncertainty is compounded by historical U.S. efforts to suppress gold prices and maintain dollar dominance. In contrast, China's ongoing gold accumulation signals a strategic move to hedge against the dollar's decline and enhance its influence globally. Let's get back to the interview.
By 2002, clearly having the state got its position to its satisfaction, it then opened up the market, the gold and silver market, to the Chinese public. And the Chinese public were actually encouraged by the Chinese authorities to use the newly set up Shanghai Gold Exchange to acquire gold as part of their own wealth. The television adverts and all the rest of it were the timing of that was that the timing of these Chinese advertisements telling their citizens to accumulate gold was basically around about the time when we had the great financial crisis developing, which ended up with Lehman, going bust and all the rest of it. So obviously, you could see that the psychology, if you like, of the Chinese leadership, looking at what was going on in the dollar and thinking, hold on a minute, this is not good for our citizens. They were encouraging Chinese citizens to go out and buy gold. So, interesting point about the timing of that. Now, I think that by that 2002 date, just looking at those flows, the capital flows in, the export surpluses going out, I reckon that at contemporary prices, the People's Bank could easily have accumulated up to 20,000 tons of gold. And at the time, I think the People's Bank said it had something like 610 tons. That was it. The rest is secret. We have a similar situation in Russia. Russia lost all her gold, basically, before Putin came in. And since then, certainly the policy has changed. Russia has gone very anti-Western currencies. Very notably since sanctions, SWIFT was closed down to it and sanctions were imposed. And effectively, the West is stealing the credit reserves on the central bank's balance sheet. And that's subject still for today. But at the same time, Russia has been ramping up her gold production. She now produces over 300 tons a year. And I think she may just be third to Australia, but if it is, it's sort of level pegging, with plans to increase even further. Ever since 2002, we have seen the Chinese public has accumulated something like 24,000 tons of gold. This is on top of anything that the state has got hidden round those various accounts which I just described. That's, and still we see that China has, she's confirmed this policy in effect by investing as a priority in her mine output. She very quickly became the largest miner by gold output in the world, overtaking South Africa, which was admittedly declining at that stage. On top of that, we know that gold has been migrating from us to China, and it never gets out of China. A little bit comes out maybe in the form of jewelry, but no, it basically is Hotel California for gold. And I think that this has got the makings of an absolute crisis for the West.
So, why is China shifting away from US debt and towards gold? This strategy is behind China's move towards de-dollarization and embracing a common trade currency advocated by BRICS nations, spearheaded by Russia. This currency is distinct because it's proposed to be backed by gold. China and Russia are amassing gold reserves, prompted by fears of US asset confiscation and the risks associated with holding US debt. This move suggests a shift from dollar reliance towards gold as a hedge among BRICS nations. Share your thoughts on Alasdair's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.